You think the government controls your money. You think Congress decides fiscal policy. You think the president has the final say on the economy. But here's the truth. They've been hiding for over a century. The most powerful financial institution in America isn't government at all. It's private. It's unelected. It's never been audited. And the families who built it have been playing the same game since before your grandparents were born. The Federal Reserve, just the name sounds official. Federal, like it's part of the government, like it answers to you, but it doesn't. It's as federal as Federal Express, a private corporation with a government-sounding name. And that was always the point. November 22nd, 1910, a cold night on the coast of Georgia, 7 men board a private railway car in New Jersey. They use only first names, no last names, no titles, no documentation. The train heads south through the darkness, and when it arrives at Jekyll Island, history changes forever. But you've never heard this story because they made sure you wouldn't. Who were these men? Senator Nelson Aldrich, father-in-law to John D. Rockefeller Jr., Frank Van, president of the National City Bank, the most powerful bank in America, Angie Davison, senior partner at J.P. Morgan, Charles Norton, president of First National Bank, Benjamin Strong, representing the Morgan interests, Paul Warburg, partner at Kuhn, Loeb and Company, representing the Rothschild banking empire, and one academic, Professor Appiah, Andrew, to give the whole thing intellectual credibility. They told the public they were going duck hunting. They spent 9 days behind closed doors at the Jekyll Island Club. No servants allowed in the meeting room. No records kept. Just 7 men designing the future of American finance. And what they created wasn't a government institution. It was a cartel, a private banking monopoly dressed up as public service. Paul Warburg was the architect. He'd watched how European central banks operated, how they controlled money supply, how they profited from government debt, how they could create booms and busts at will. And he wanted that power in America. But there was a problem. Americans hated central banks. They'd killed 2 previous attempts, so Warburg needed camouflage. He needed it to look like government, to sound like government, to feel like government, while functioning as a private bank. The plan they drafted at Jekyll Island was brilliant in its deception. Create 12 regional Federal Reserve banks, making it look decentralized, put a board of governors in Washington, making it look governmental, but the actual ownership, that would be private. The member banks would own the shares. The profits would flow to private shareholders. And the whole system would be protected by law from outside interference. They called it the Federal Reserve System, not a bank. Seestein, making it sound complex, technical, boring, something ordinary people wouldn't question. And that linguistic trick, it worked perfectly. It took 3 years to get it passed. 3 years of lobbying, propaganda, and political maneuvering. The banking establishment funded both sides of every debate. They wrote editorials supporting it. They wrote editorials opposing it, creating the illusion of democratic discourse while controlling both narratives. And in December 1913, when most of Congress was already home for Christmas, they pushed it through. President Woodrow Wilson signed the Federal Reserve Act on December 23, 1913. Years later, he would write, "I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is now controlled by its system of credit. We are no longer a government by conviction in the vote of the majority, but a government by the opinion and duress of a small group of dominant men." He knew. He understood what he'd done. He'd sold American sovereignty to private bankers in exchange for campaign financing, and there was no taking it back. So what did the Federal Reserve actually do? On the surface, it stabilized the economy, prevented panics, managed the money supply. That was the promise. But look at what actually happened. Before the Federal Reserve, America had periodic financial crises, painful but short. After the Federal Reserve, the Great Depression, the worst economic catastrophe in modern history. 16 years after the Fed was created, the entire system collapsed. 1929, the stock market crashes. Banks fail by the thousands. Unemployment hits 25%. Fortunes evaporate overnight. Families lose everything. And what does the Federal Reserve do? The institution specifically created to prevent this. It contracts the money supply, makes the crisis worse, deliberately. Because in a depression, assets become cheap, and the people with money, the people connected to the Federal Reserve banks, they buy everything. This wasn't incompetence. It was designy. The Fed wasn't created to serve America. It was created to serve its owners. And during the Depression, wealth transferred from the middle class to the banking elite on a scale never seen before. Millions lost their savings. Hundreds of thousands lost their homes. But the shareholders of the Federal Reserve banks, they accumulated assets at depression prices and emerged from the crisis richer than ever. But here's where it gets truly sinister. The gold, America's wealth was measured in gold. Real, tangible value. And after the Depression, Franklin Roosevelt did something unprecedented. Executive Order 6102, April 5th, 1933. It became illegal for Americans to own gold. Illegal to possess the one asset that held real value. Citizens were forced to turn in their gold to the Federal Reserve banks at $20.67 per ounce. And what happened next? The government revalued gold at $35 per ounce. An instant 69% devaluation of the dollar. Who profited? The banks holding the gold? Who lost? Everyone who'd been forced to sell. Does that sound like a government serving its people? Or a private cartel robbing them legally? World War II came and went. America emerged as the dominant economic power. And at Bretton Woods in 1944, the dollar became the world's reserve currency, backed by gold. Every dollar was redeemable for gold at $35 per ounce. It was America's promise to the world, and the Federal Reserve was the guardian of that promise. But promises are expensive, especially when you're printing money to fund wars, welfare programs, and endless government expansion. By the 1960s, foreign governments started noticing something. There were more dollars in circulation than America had gold to back them. France, under Charles de Gaulle, started demanding gold for dollars. Other countries followed, and the Federal Reserve faced a choice: honor the promise and run out of gold, or break the promise and keep printing. August 15, 1971, President Richard Nixon appears on television. He announces that the United States is temporarily suspending the convertibility of dollars to gold. Temporary. That was over 50 years ago. The gold window never reopened. And in that moment, the dollar became something else entirely. Not money backed by gold. Not money backed by anything. Just paper. Printed at will by a private bank with no accountability. This was the moment when the Federal Reserve became truly omnipotent. Because once money is detached from physical reality, it becomes abstract, malleable, infinite, and whoever controls the printing press controls everything. If you're starting to feel sick, if something in your gut is telling you this isn't right, trust that feeling. Because what comes next is even worse. Hit that subscribe button now, because you need to see how this ends. The 1980s and 90s. The Fed experiments with its new power. Interest rates become weapons. Paul Volcker, Fed chairman, raises rates to 20% to fight inflation. The real effect: small businesses collapse. Family farms are foreclosed. Manufacturing moves overseas. But Wall Street thrives because high interest rates mean higher returns for creditors. And who are the biggest creditors? The banks. Always the banks. Then comes Alan Greene's 1987 to 2006, 19 years of the maestro, as they called him. He perfected the game: lower interest rates when markets panic, flood the system with cheap money, create bubbles, then raise rates just enough to pop them, crash the economy, buy the assets, repeat, the dot-com bubble, the housing bubble. Each one transferred wealth from ordinary Americans to those close to the Fed's money spigot. And through it all, nobody asked the basic question: who benefits? Who profits when the Fed creates money from nothing, loans it to banks at near zero rates, and those banks loan it to you at 5, 10, 15%. The spread is pure profit. Trillions of dollars extracted from the productive economy into the financial sector. And it's all legal, protected encouraged. But 2008, that's when the mask came off. The housing bubble bursts, Lehman Brothers collapses, the global financial system teeters on the edge. And what does the Federal Reserve do? It bails out the banks, $700 billion from Congress. But that was just the public number. The real number, the Fed secretly loaned $16 trillion to financial institutions worldwide. 16 trillion. That's not a rescue. That's a transfer of wealth so massive it defies comprehension. Who authorized this? Congress didn't know until years later. The president didn't have details. The American people, they were told it was necessary, essential, too complex to explain. And when Senator Bernie Sanders finally forced a limited audit, what did they find? The Fed had bailed out foreign banks, central banks, corporations that weren't even American, all in secret, all without accountability. Would you trust a system that operates like this? A system that creates trillions from nothing, distributes it to cronies, and tells you it's for your own good. Here's what they don't want you to understand, ... Every dollar the Federal Reserve creates dilutes the dollars you already have. It's not free money. It's a hidden tax. When they print trillions to bail out banks, your savings lose value. Your salary loses purchasing power. Your future becomes more expensive. And the worst part, you can't opt out. You're forced to use dollars, forced to participate in a system designed to extract your wealth, and it's accelerating. March 2020, the pandemic hits. The economy shuts down, and the Federal Reserve responds with the most aggressive money creation in history. $4 trillion in months. Then $5 trillion, then $6. The money printer goes brr as the internet mocked. But it's not funny. It's theft on a scale that would make medieval kings weep with envy. Who got that money? Did it go to you? To small businesses struggling to survive? Some crumbs, maybe. Stimulus checks for photo ops. But the real money, it went to Wall Street, corporate bonds, mortgage-backed securities. The stock market hit record highs while Main Street collapsed. Billionaires added trillions to their net worth while 40 million Americans filed for unemployment. That's not a malfunction. That's the Federal Reserve working exactly as designed. And now you're living with the consequences. Inflation, real inflation, not the kook numbers they publish. Your groceries cost more, your rent costs more, gas costs more, everything costs more because there are trillions more dollars chasing the same amount of goods. And when you complain, they blame supply chains. They blame Putin. They blame corporate greed. Anything except the truth. The Federal Reserve created this deliberately, and they're not stopping. Jerome Powell, the current Fed chairman, stands at his podiums and talks about price stability, about fighting inflation by raising interest rates. But raising rates doesn't fix inflation caused by money creation. It just makes borrowing more expensive. It crashes markets. It triggers recessions. And when the recession comes, the Fed will lower rates again, print more money, and restart the cycle. Because that's the game boom and bust. Expansion and contraction. Each cycle transferring more wealth upward. But here's the question nobody in power will ask, ... What if the Federal Reserve isn't failing? What if it's succeeding? What if the instability, the inequality, the constant crises ... What if that's the point? Bets on bets on bets. A house of cards built on quicksand. And the people who built it, they have no idea how to stop. Think about it. Who benefits from boom and bust cycles? Not you. You lose your job in the bust. You struggle to rebuild in the boom. But the banks, they profit both ways. They loan easy money during booms, collecting interest. They foreclose on assets during busts, acquiring property. They never lose. The system is designed so they can't lose. And the families behind the Federal Reserve, the descendants of those men on Jekyll Island, they've been playing this game for generations. Warburg, Rothschild, Rockefeller, Morgan, the names change, but the bloodlines remain. The wealth compounds, the power consolidates, and the control grid tightens. You want to know how complete their control is? Try to audit the Federal Reserve. Try to pass legislation requiring transparency. See what happens. Both parties will unite against you. The media will destroy you. The financial markets will mysteriously crash, and they'll blame it on your reckless proposals. Because the one thing the establishment agrees on, the Federal Reserve must never be truly examined. Ron Paul spent decades trying to audit the Fed. He wrote books, gave speeches, introduced legislation, and what happened? Nothing. The bills died in committee. The media ignored him, and when they couldn't ignore him, they mocked him. Call him extreme, radical, dangerous, because asking for accountability from the institution that controls the money supply, that's radical. That's extreme. In a system built on secrets, transparency is the ultimate threat, but the control goes deeper than you imagine. The Federal Reserve doesn't just control American money through its role as lender of last resort to global banks, through its dollar dominance, through its coordination with other central banks. It controls the global financial system, the European Central Bank, the Bank of Japan, the Bank of England. They all coordinate. They all follow the same playbook because they're not competitors. They're partners, nodes in the same network, building the same world. And what world is that? A world where physical cash disappears, where every transaction is digital, tracked, monitored, where central bank digital currencies replace the dollar, where your money has an expiration date, where your purchases can be restricted, where your account can be frozen if you ask the wrong questions, support the wrong causes, express the wrong opinions. This isn't speculation. It's happening right now. The Federal Reserve is actively developing a digital dollar. They call it research. They call it innovation. But read between the lines. Read what they're actually proposing. Programmable money. Money that the issuer controls even after you've earned it. That's not currency. That's a leash. And once it's implemented, once cash is obsolete, there's no escape. Can you imagine a world where your money expires if you don't spend it? Where you can't save for the future because the central bank wants to stimulate consumption? Where purchasing certain items, meat, gasoline, ammunition, whatever they decide costs more or isn't allowed at all. Where donating to certain causes or supporting certain candidates triggers automatic freezes. That world is already built. They're just waiting for the right crisis to implement it. And there will be a crisis. There's always a crisis. That's how the system perpetuates itself. Create the problem. Offer the solution. Expand the power. The Federal Reserve has been doing this for over a century. Each crisis makes them more powerful. Each rescue requires more control. Each intervention transfers more wealth. And each chimi, they promise, this is the last time, this is the fix. This will stabilize everything. And each time, it's a lie. So what do? How do you protect yourself from an institution that controls the money you're forced to use? How do you escape a system that's rigged from the foundation? First, you acknowledge reality. The Federal Reserve is not your friend. It's not a government agency serving the public good. It's a private cartel extracting wealth through money creation. Once you see that clearly, you stop believing their narratives. You stop trusting their solutions. You stop thinking the next policy will be different. Second, you educate yourself. Learn what money actually is. Learn the difference between currency and wealth. Learn about assets that can't be printed into existence. Learn about systems that operate outside central bank control. This knowledge is your armor because they depend on your ignorance, on your assumption that someone responsible is in charge. But nobody responsible is in charge. The foxes are guarding the henhouse, and they're very, very hungry. Third, you prepare, diversify out of purely dollar-based assets. Hold physical assets, build skills that have value independent of currency. Create networks based on trust rather than transactions. Because when the next crisis comes in, it will come to you. You want to be entirely dependent on a system that views you as a resource to extract. And finally, you speak up. You share what you know. You refuse to be silent because their greatest weapon is your compliance, your acceptance, your belief that this is just how things are. But it's not. It's how they made things. And what humans built, humans can unbuild. The Federal Reserve is not eternal. It's not inevitable. It's a century-old experiment in private control of public money, and experiments end, sometimes through reform, sometimes through collapse, but they end. The question is whether you'll be ready when it does. Right now, in this moment, you have a choice. You can close this video, go back to your life, and pretend everything's fine. Pretend the people in charge have your best interests at heart. Pretend the system is working. Or you can acknowledge what you've just learned. You can start asking questions. You can begin preparing for what's coming, because it is coming. The debt is unsustainable. The money printing is unsustainable. The wealth inequality is unsustainable. The lies are unsustainable. Something will break. The only question is when. And on which side of that break will you be standing? If this has shaken you, if you're feeling that cold clarity that comes from seeing behind the curtain, then you're ready for what comes next. Hit that subscribe button, because the next episode reveals something even darker. Something the Federal Reserve helped create but doesn't control anymore. A shadow banking system so massive, so interconnected, so fragile that when it collapses, and it will collapse, it will make 2008 look like a preview. We're going into the derivatives market. $600 trillion in notional value. The Federal Reserve is just the beginning. The control grid is deeper than you imagine. But now you see, and seeing, that's the first step to breaking free. The question is, are you ready to take the next one?